200 looks up for grabs with less than a half hour left, about a 30 basis point advance on the day now as we've come off the highs, but we're still up off the lows. Kevin Green joins me to take a look at flows into the close. Look at that. All right, KG, where are we at? What do you see?
Well, obviously, we do see a lot of indecision here, Oliver, post that FOMC meeting and the presser, so much so that if you're looking at the up volume and down volume for the E-mini S&P futures, it's 50-50. So we are having a little bit of a battle here, but we are also seeing a little bit of a lack of liquidity. This is why we're seeing these really outsized candles, especially if you're looking at a 5-day or a 5-minute candle or even a 15-minute candle. But we should expect that we should try to either break to the upside or break to the downside, kind of getting out of that range that we've been talking about over the last couple of trading sessions here. Now, if we look at the open interest chart for today, we actually do have a very interesting kind of ascending channel that's taking place, respecting both the highs and lows of that candle. And if you kind of notice, when we do touch the lower end of that channel, we have a lot of buyers stepping in. So you're seeing very long wicks, but you're still seeing green bodies, and we continue to move up and seeing resistance at 56.50. So I did kind of move up the intermediate pressure level post the Fed meeting here, and now having that positive gamma level sitting at 5,700, rightfully so. That actually could be an area that we touch today. If we can break out of 56.65, that could be something that we do test. But 56.50 is going to be the first area to try to be able to hold. Then I have a pretty big gap until 5,500. I moved it up from 5,400. At this point, it seems like the market really doesn't want to test that for now. And if you are a trader kind of going into the close, we stay into this channel until we break out or break down. But the upside of this candle is actually a little bit more, gives you a little bit more wiggle room for bulls here than bears, because we just continue to see buying pressure coming in once we hit that 20-period moving average on the 15-minute, as well as hitting that lower support area on that channel. Overall, this is still, for the most part, bullish for that.
It's bulls' game to lose here, right? Based on the momentum, the chart, the options flow. It's bulls' game to lose. I mean, and the fact that you're seeing, it seems like the put trades generally lifting up higher too. I mean, all of it seems like momentum higher, but this is our conversation yesterday about candles versus close. It seems like the closing price is becoming a lot more important because we're not able to break free of some of these gamma levels, even though we're hitting intraday highs, records.
Yeah, that's a really key thing to kind of note too. And we'll kind of talk about a daily chart here in a few minutes that I think really does highlight that.
Okay.
When you're looking at today's volume, and if we can go to the volume chart for today, we can kind of hash this out a little bit more.
Okay.
Today's volume chart, we have another development that is taking place here. Now we have negative gamma levels sitting at 5,600. You want to be able to see buyers stepping in at that level, and then positive 5,700. So we have a 100-point range. We have a lot that we can do within there. But our balance area for today is 56.28. And if you kind of notice, we've actually hit that level several different times. That balance area basically means dealers are going to be net neutral for today. When we look at those negative gamma pressure levels, that's where we have a lot of buildup in negative positions like puts, those that are buying those puts. But if we go below 56.28, we're theoretically actually in negative gamma territory in this market. So we are seeing some buyers really stepping in. They're trying to hold it. If they break that, 5,600 could actually be on the table here today. So it is a battle, but kind of knowing the makeup of today's session so far, and knowing that we had that spike to the upside after the report, and now also just kind of confirming here, the flows themselves is pretty much 50-50, and the put flows today are actually more aggressive than the call side, even though when you're looking at the overall options levels themselves for volume, it's about half of what we've seen on a 5-day moving average. So volume has been a little bit light for options, but the put side has been gaining some traction here. 56.28 is actually that line in the sand that I wanted to highlight. Usually we just kind of talk about it, but it is kind of that line in the sand that you want to have as your first area of defense if you are a bull. And if we break below that, we could gap another 28 points hitting that 5,600 level.
And that's, I like those levels to think about, because 5,600 is kind of the beginning of this roughly 3 to 4 day range we've been in. So that seems like it lines up with the gamma levels where that's kind of your magnet if we do break down. And that could be easily framed by bulls as just a little bit of a breather here, some profit taking, sell the news, maybe we go back to where we were on Friday. But then if we start getting below 56, Then you start wondering if the whole rally last week was like a big fake out, because one of those days was super, super gappy, the Wednesday NVIDIA rally. And that's where it feels like maybe it could get dicey if we're not able to hold up here, because that's basically like a 150-point range that we went in that one day from low to high. You know, I know you know what I'm talking about.
Yeah, and we need to have liquidity coming back into the market. It's not out of the ordinary that before we actually have a Fed meeting or any type of major event that we see kind of spreads widening out, lack of liquidity, meaning a lack of participants in the market, which is where we can have these really gappy type of moves. And that's not only for the indexes, it's also for the stocks as well. If you're talking about NVIDIA or AMD or what have you. What we are seeing right now is we had this liquidity gap that took place for the meeting, and liquidity hasn't returned. That's not what you really want to see going into tomorrow and Friday. If we do see a drying up of liquidity, that's ultimately bearish here. Let's look at the last chart and the reason why I really call that out. So this is a 6-month daily chart of the S&P 500, and it's really trying to be simplistic. Obviously, we have that trend line to the upside here, but I also have in purple this kind of distorted inverse head and shoulders pattern, which is actually bullish. Okay, so which is actually bullish. We are testing that neckline right now. What you don't want to see for that what you don't want to see for that candle is that neckline being tested and a spinning top happening. Or you have a hanging man candle. Once again, those are reversal candles. And that's something that I'm being mindful of going into this close. If we have pretty much no body on this candle and it's pretty much flat, and we have this wide range, that means that bulls couldn't do enough to be able to break the market to the upside. That means bears held their own for the most part to keep this market compressed for now, but it doesn't serve well.
Yeah.
Inverse head
we're kind of going for that.
Bullish.
We're kind of going for that, right? Like right now, basically, it kind of looks like a spinning top.
We want to break out of this in the next 2 trading sessions. We talk about the compression. You want to break out of this like ASAP.
Yeah.
And if not, and we do see a breakdown, once again, 2 weeks of seasonality to the downside, or when we have high volatility to the downside, that's where it kind of plays into account. VIX is still elevated. Let's say the S&P still closes, let's say 0.2% higher, and the VIX is higher. VIX up, stocks up. Oliver, what is that?
Yeah.
You know,
usually that's when things are getting a little bit extended. Nice, good stuff. All right, so like again, bulls have got pretty much everything they could have asked for here, but they're kind of fumbling it a little bit. Opposition hasn't picked up the ball, but it's kind of like bouncing around right now, and we're not in the clear. It's also, it shows up in other places. Obviously, it echoes in other places. Bitcoin's a little change. We're going to talk about that in a sec. BTC obviously a little change, and then bonds, which are selling off. The dollars come all the way back to positive, which is pretty amazing. VIX 17.9 though, still pretty calm. Thanks, KG.